You graduate from college in the summer of 2008. You shake hands with professors, take photos with your parents, and hear the same sentence over and over again. Congratulations. Your future is about to begin. The plan seems simple. Find a job, get an apartment, start your life. For most of your childhood, the economy always seemed to grow. Houses kept getting more expensive. The stock market kept climbing. Everyone said America was too big to fail. Then September arrives. One morning, you wake up, turn on the news, and hear a sentence that doesn't make sense. Lehman Brothers has just filed for bankruptcy. At first, it sounds like something happening far away on Wall Street, a problem for bankers in expensive suits. But over the next few weeks, strange things start happening. Your parents start watching the news every night. Your dad stops talking about his retirement account, and companies across the country quietly stop hiring. You don't realize it yet, but you graduated into the worst economy in generations, and the life you thought you were about to start is about to disappear. Just a year earlier, everything feels like it's going exactly the way it's supposed to. You graduate from college, and everyone around you keeps repeating the same message. The economy is strong, and opportunities are everywhere. Your parents talk about how their house has nearly doubled in value since they bought it. It feels like the future is opening up right on schedule. Everywhere you look, people are buying things they couldn't afford just a few years ago. Friends' families are upgrading to bigger homes, new SUVs appear in driveways, and banks seem happy to approve loans for almost anyone. Mortgage ads promise low payments and easy approvals, making it sound like owning a house is something anyone can do. The idea that the system could break doesn't even cross your mind. At school, career advisors talk about booming industries waiting for graduates like you. Finance, real estate, consulting, companies are hiring aggressively and offering salaries that sound incredible for someone fresh out of college. Some of your classmates already have job offers lined up months before graduation. The message is clear. Work hard, get your degree, and the world will reward you. So when you walk across the stage to collect your diploma in 2008, you feel confident about what comes next. The economy looks strong on the news, your family seems financially secure, and the path ahead feels predictable. It's the kind of moment where life seems perfectly stable. But the truth is, the stability everyone believes in is already starting to crack. A few months after graduation, small things start to feel different. You notice that some of the companies your classmates were excited about suddenly stop responding to emails. Job postings that were everywhere a year ago begin disappearing from career websites. When you ask around, people say the same thing. Hiring is slowing down for a while. At home, the conversations start changing too. Your parents begin watching the news more closely than usual, especially the business channels. Words like housing slowdown and subprime mortgages keep coming up, even though nobody around you fully understands what they mean. It still sounds like a technical problem somewhere deep inside the financial system. Then the stories start getting closer. A mortgage company in a nearby town shuts down, and hundreds of employees lose their jobs overnight. A friend's older brother, who works in real estate, suddenly can't find buyers for houses that would have sold instantly, just a year earlier. People start whispering about something called a housing bubble, but most assume it will pass. Still, nobody around you thinks this is the beginning of a crisis. The stock market hasn't completely collapsed yet, and experts on TV keep saying the economy is fundamentally strong. So you keep sending out job applications, believing things will pick up again soon. But deep down, something feels off, like the ground underneath the economy has started shifting, even if most people can't see it yet. While everyone around you is living life like normal, something dangerous is quietly building underneath the economy. You don't see it yet, but millions of home loans are being handed out to people who can barely afford them. Banks approve mortgages with tiny down payments, low teaser rates, and barely any checks on income. For a while, it feels like easy money. Your friends' families start buying bigger houses than they ever thought possible. Neighbors refinance their homes and suddenly have cash for vacations, renovations, or new cars. It all seems harmless, even exciting. But the truth is that many of those loans are built on a fragile assumption that housing prices will keep rising forever. Behind the scenes, banks are doing something even riskier. They bundle thousands of these mortgages together and sell them as investments to other banks and investors around the world. On paper, it looks safe because housing has always been considered stable, but in reality, the entire financial system is slowly becoming tied to loans that many borrowers might never be able to repay. For years, nobody questions it because the system keeps working. Houses keep selling. Prices keep rising. Money keeps flowing. But underneath the surface, the foundation is weakening with every risky loan being written. And by the time the first cracks start appearing in the housing market, that hidden time bomb is already ticking. One morning in September 2008, your phone starts buzzing before you even get out of bed. Messages from friends, alerts from news apps, people asking the same confused question: what is Lehman Brothers? You turn on the TV and every channel is showing the same footage. Employees walking out of a skyscraper in New York carrying cardboard boxes. At first it still feels distant. Wall Street problems, banker problems. But the reporters keep repeating something that makes your stomach tighten. This bank is over 150 years old. If a company that big can collapse overnight, what else could fall with it? Over the next few days, the news gets worse. The stock market starts dropping hundreds of points at a time. Your parents sit at the kitchen table refreshing their retirement account again and again, watching numbers shrink by the hour. Nobody says it out loud, but the look on their faces tells you everything. And then the feeling spreads everywhere. At coffee shops, at work, on campus. People stop talking about weekend plans and start talking about the economy. Words like crash, bailout, and financial meltdown suddenly become part of everyday conversation. For the first time, it hits you. This isn't just something happening on Wall Street. Something much bigger is breaking. A few weeks after the market crash, the consequences start showing up in real life. Companies that once promised growth suddenly start talking about cost cutting. Hiring freezes turn into layoffs, and the job postings you were watching completely disappear. The career you thought you were about to start suddenly feels uncertain. Then it gets closer to home. One afternoon, your dad comes home earlier than usual, holding a small cardboard box with a few things from his desk. He tries to act calm, saying the company is restructuring, but you can tell something is wrong. After decades at the same job, he's suddenly unemployed. And it's not just him. Friends start telling similar stories about their parents and relatives. A neighbor who worked at the same factory for 20 years is laid off in a single meeting. Another family down the street quietly puts their house up for sale after both parents lose their jobs. The worst part is how quickly it spreads. Every week, another business announces layoffs, another office closes, another group of workers walks out carrying boxes. The crisis that once sounded like a Wall Street problem has now reached everyday homes. And suddenly everyone is wondering the same thing: who's next? A few months later, the changes start showing up in your own neighborhood. It begins with one house at the end of the street. A small white sign appears on the lawn, with a word you've never really paid attention to before: foreclosure. At first it just feels like one family having bad luck. Then another house gets the same sign, and another. People you've known for years start disappearing almost overnight. One weekend, you see moving trucks outside a neighbor's house, furniture being loaded while the owners avoid eye contact. A few weeks later, the house sits completely empty. Curtains gone, mailbox stuffed with unopened letters. The strange part is how fast the neighborhood changes. Homes that once sold in a week now sit on the market for months with price cuts every few weeks. News reports say millions of Americans are losing their homes as mortgage payments suddenly skyrocket or property values collapse. And for the first time, the housing crisis stops feeling like numbers on the news. It's not graphs or statistics anymore. It's empty driveways, dark windows at night, and entire families quietly disappearing from the streets you grew up on. By the time 2009 arrives, the panic has settled into something quieter and heavier. Nobody talks about getting rich anymore. The conversations everywhere are about cutting back. At dinner tables, in grocery store lines, on late-night phone calls with relatives, everyone is trying to figure out how to stretch money just a little further. Your family starts changing habits without even announcing it. Eating out disappears first. Vacations quietly get canceled. Your parents begin comparing grocery prices like it's a strategy game, choosing store brands over the ones you grew up with. Every purchase suddenly comes with a moment of hesitation. Then the bigger adjustments start. Friends' parents pick up second jobs, evening shifts at grocery stores, weekend work at restaurants, driving deliveries after their regular work hours. People who once had stable careers now take whatever they can get just to keep money coming in. Pride slowly gives way to survival. Small businesses around town struggle even more. A local salon starts offering huge discounts just to bring customers through the door. Shops shorten their hours, turn off half their lights, and hope the month's revenue will cover rent. Owners smile at customers during the day, but everyone knows they're just trying to stay afloat one more month. And for your generation, the timing couldn't be worse. You graduated expecting to start building a life, a career, an apartment, independence. Instead, you're sending out dozens of job applications that lead nowhere, watching the economy grind forward while you wait for an opportunity that might not come anytime soon. Months turn into years, and something unsettling becomes clear. The economy might eventually recover, but the damage to your generation has already been done. The jobs that once seemed guaranteed after college are now rare, replaced by unpaid internships, temporary contracts, and positions that pay far less than anyone expected. Many of your friends start changing their plans completely. Some move back in with their parents because rent in big cities is impossible without stable work. Others take jobs that have nothing to do with their degrees, just to have a paycheck coming in. The excitement of starting adulthood slowly turns into a feeling of being stuck in place. Meanwhile, the older generation is struggling in a different way. People who spent decades building careers suddenly find themselves competing for entry-level jobs with recent graduates. Some never recover financially after losing their savings, retirement funds, or homes during the crash. The stability they spent a lifetime building disappears almost overnight. And this is the part nobody talked about when the crisis first began. Even after the stock market eventually climbs back up and the headlines say the recession is over, millions of people are still trying to rebuild lives that were shattered during those years. For many of them, and for many people in your generation, the effects of the crisis will follow them for the rest of their lives. By the early 2000s, the headlines begin to sound hopeful again. News anchors start talking about recovery, about markets stabilizing and banks returning to profit. The stock market slowly climbs back up, and politicians announce that the worst of the recession is finally over. On paper, it looks like the crisis has passed, but the world around you doesn't feel the same as it did before. Some of the neighbors who moved away during the foreclosure wave never return. A few local businesses that closed their doors during the worst years are still empty storefronts with faded signs in the windows. Life keeps moving forward, but the scars are everywhere if you know where to look. Your generation carries its own version of those scars. Starting your career during the worst economy in decades means lower salaries, slower promotions, and years spent trying to catch up financially. Friends who once dreamed about buying homes or starting companies now talk about paying off student loans and rebuilding savings that never had a chance to grow. And that's the quiet truth about the 2008 financial crisis. The markets eventually recovered, the banks recovered, but for millions of ordinary people who lived through those years, the consequences never fully disappeared. For them, and for many people in your generation, the crisis didn't really end. It just became part of the life you had to rebuild afterward. That's all for today. Thanks for watching. If you want more videos like this, please subscribe to the channel. More is coming soon.